Hi, Bo Fisher, Fisher and Weens Wealth Management. We're just about getting into fall. I've got my hot tea ready to go, and the markets are all over the place. I wanted to spend some time today discussing the bond market. Really, we call that fixed income. Usually the bond market and fixed income markets are kind of boring. They just kind of click along, do what they're going to do, and nothing really happens. Because what a bond is, it's like a loan. You're going to loan somebody some money. You're going to invest in a bond. It has a term associated with it. It's going to pay you interest. And at the end of the term, you get your money back. It's supposed to just kind of click along and do what's on the contract. The interesting thing is, though, bonds and fixed income are inversely proportionate to interest rates. That's kind of a fancy term, but really all it means is that they go in opposite directions. They're inversely proportionate. When interest rates go up, bonds go down. And when interest rates go down, bonds go up. So what I'm showing you here is something that a lot of people don't keep an eye on. This is the 10-year Treasury interest rate. And as you can see from the chart, interest rates have really climbed and pretty dramatically this year. And what does that mean? That means fixed income has actually lost money. And that's what this chart shows. They've lost about 4% as a market across the country. Now, as a reminder, as a refresher, we want to have some money in aggressive stock market type investments, and then we want to have some money in fixed income. And the older you get, the more you want to have towards the fixed income conservative investments historically, and the less you want to have in the risky stock. And the younger you are, the more you want to have in the stock market and less in the conservative fixed income. But what I was just talking about, as interest rates are going up and bonds have actually lost money, that conservative money is not really that conservative. It hasn't been up and down like the stock market, but it's actually lost money in 2018 so far this year. That's a difficult position to invest in. Now, let's look at the stock market. What I'm showing you here is 2018 stock market. As you can see, in January, it went way up. In February, it went way down. And then ever since, it's been kind of going up and down with a slow trajectory up until actually this week. As I'm recording this video, the market, stock market that is, basically lost everything it had gained all the way through the year, to where now we're fluttering right around zero, maybe just a little bit above zero. So now there's the backdrop. Our aggressive stock market investment has basically been flat, 0 to 1% so far this year. And then the market that's supposed to be conservative, the fixed income market, has actually lost 4% because interest rates have been going up. And that's a very difficult position to be in to try to manage money. Now, we as your financial advisor and your money manager, we're a lot more diverse than just putting money into the stock market and putting money into the bond market. We have a lot more investments, and we're a lot more strategic than that. And we're staying vigilant over your investments. But it is important as you look and watch the TV that you don't just watch the stock market news. It's fascinating to hear what Elon Musk is up to, or Google is doing, or Amazon. Those are great stories. But if you really want to hear what's actually affecting your finances or your portfolio, depending on how old you are, you really should be listening for what's happening to interest rates. It's not sexy, it's not super exciting, but it does affect you. And so if you hear interest rates are skyrocketing, you should be thinking, okay, they're going up, fixed income probably coming down. Ooh, I wonder what Bo's doing. Or if they say interest rates are plummeting, you should be thinking, fixed income might be making me some money. Interesting. Now, we are investing in a significant amount of different types of assets, including international, which I haven't even started talking about. But I do want you to know that it is a difficult position and difficult market position that we're in right now, but we're working hard for you. So if you want to talk about this, you want to talk about what we're up to, if you have other financial questions, just what's going on in life, we're here to help. So until we chat, signing off for now, this is Bo Fisher. Enjoy the fall.